be Nvidia. Now, this name has had a nice run. It's about 30% now this year. Of course, big, powerful move it had over off that April low. You say it's still a buy. Let's go through the reasons why. Point one, no surprise, AI market leader.
Yeah, I think this is something that you see the AI sector rebounding so strongly after we got to the market lows. And if you talk about AI market leadership, we have to talk about the leader, the most important stock in the space, and that's Nvidia.
Point number two, why you say it's a buy, H20 chip sales to China, they are back on.
Yeah, so this was a big sort of issue for the company in the last quarter amidst the height of all of the trade talk. The tariff was that the company was blocked from selling these China chips or chips that complied with the export restrictions and took a big write-down because of that. China, obviously, huge market. Big news for the company that they're now under license to start exporting these chips again.
Yeah, tremendous. I think CEO Jensen Huang, they're kind of proving his chops, not just as an executive, but clearly as a politician, as a diplomat.
Yeah, absolutely.
Third reason, first company to $4 trillion market cap.
Yeah, so first company to hit $4 trillion, which in itself, amazing milestone. But I think looking out further, could this be the company that achieves $5 trillion market cap and the first one to do it? AI is getting stronger all the time. And again, this is the company that's leading the space right now. There is no other company that competes with Nvidia at this level.
Now, before you pile in, let's end here. The downside risks that you say investors need to think about with this one.
Yeah, the downside risk is one that I think has been litigated over and over, particularly over the last couple of years, which is when you get a stock that's performing so well, you're going to get critics come out and talk about the risks. And the risks with AI is, first of all, the threat of competition within the space. But the threat also, as we saw with tariffs and the trade war, is of geopolitics getting in the way and therefore providing some kind of erosion to the margins that they enjoy. Do
you ever think about, Will, this name, obviously very well known and loved on the street. I mean, nearly 90% of analysts who are paid to tell you what to do with it, I think nearly 90% say it's one's a buy. Is that ever a concern, Will, to you, that everybody seems to be piled on one side of the boat?
I think it was, let's say, 6 to 12 months ago, and particularly when the trade war started at the beginning of the year. And you saw that reflected in the stock price. The stock took a big dive along with everybody else as people were really trying to figure out what does this mean for a company like Nvidia. But as you can see, that once there was some clarity, and particularly around the exporting of chips to China, the company has come back, very, very strongly and established a market-leading position, not just in terms of AI, but in terms of overall stock market leadership with the $4 trillion market cap.
All right.
The popularity of generative AI tools like ChatGPT has propelled artificial intelligence, AI, into the mainstream, and as a result, the valuations of many tech businesses, as well as those from any field that uses AI, have skyrocketed. Nvidia, the most valuable public corporation in the world with a market valuation of over $4.2 trillion, has benefited more from recent advancements in AI than any other stock. In only the last 3 years, its stock has increased by almost 900%. For comparison, the S&P 500 has only increased by almost 60% during that time. Nvidia is scheduled to release its fiscal second quarter results on August 27th. Investors may be wondering whether they should purchase Nvidia's stock prior to the earnings in order to potentially benefit from a post-earnings stock price increase, but only time will tell what those earnings show. Theoretically, it seems like a good idea to expect positive outcomes, but regardless of the earnings results, history has demonstrated that this doesn't always work out well for investors. The first thing that stands out in the above chart is the lack of correlation between Nvidia's stock price performance and its earnings. The performance of Nvidia's stock price the day following its last 4 earnings reports is shown below. Nvidia's stock saw notable drops the next day, despite exceeding earnings forecasts. This demonstrates that investors aren't just worried about performance that is too high or too low. They might also be considering things like valuations, market mood generally, and future guidance. Regardless of correlation, or lack thereof, one thing to remember is that attempting to time the market is a surefire way to end up disappointed and frequently backfire. The stock market doesn't function according to logical cause and effect, even though it could appear that results should cause a stock's price to move in a particular manner. 10 times the S&P 500 average, Nvidia's trailing 12-month price-to-sales PS ratio of 29 is the highest of any S&P 500 stock. Due to its extremely high value, Nvidia has limited margin for error, or what investors would interpret as error, and volatility may rise. Dollar cost averaging would be a wise move if you appreciate Nvidia as a business. This will mitigate some of the volatility concerns and enable you to gradually accumulate shares. Investors should place their greatest emphasis on and rely on Nvidia's stock because it has demonstrated long-term growth despite brief declines. The market's perception of a stock can be greatly influenced by quarterly earnings, which are momentous occasions. Even if you don't own stock in that company, it's still beneficial to listen to management teams at these events because they can also have an impact on businesses in the same industry. The AMD results call on August 5th is one event that investors in Nvidia should be aware of. In the data center computing market, AMD and Nvidia are direct rivals. If AMD's data center division does well, Nvidia's stock may rise. Conversely, if there is any perceived weakness, Nvidia's stock could decline. What are the chances that Nvidia's stock will rise after August 5th, then? Let's investigate. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. Nvidia has a larger market share than AMD, despite both companies being important players in the data center industry. According to one report, Nvidia holds a 90% market share in data centers for GPUs, graphics processing units. That is incredible domination and demonstrates how much better Nvidia's GPUs are than AMD's. Although there may not be much of a difference in raw power performance between the two, Nvidia does well in the software that is used in conjunction with their GPUs. Users may easily manage how workloads are executed within a GPU and how they interact in clusters with Nvidia's CUDA software. AMD is far behind in the competition for data center GPUs because it has nothing comparable to this. Consequently, Nvidia's stock might not be as closely related to AMD's as one might believe. AMD may lose market share to Nvidia if it announces weak demand for the second quarter. Nvidia's stock might rise, though, if AMD reports high demand for Q2, as this could indicate a general increase in demand for data centers. Additionally, AMD's business is more varied than Nvidia's because it also produces embedded processors, other data center components, and CPUs for computers. Therefore, the price can drop if AMD's data center does well and the other two divisions struggle. However, Nvidia wouldn't have any motivation to decline because it isn't as exposed to those businesses as AMD is. I don't think AMD's earnings can hurt Nvidia's stock until AMD says something like, "Data center demand for GPUs has completely dried up." But we are aware that this is untrue. Several AI hyperscalers have already increased their historically high 2025 capital expenditure budgets. Alphabet increased its capital expenditure projection from $75 billion to $85 billion, mostly as a result of buying more servers and speeding up the construction of data centers. This suggests that there is still a very significant demand for AMD and Nvidia's data center computing systems. During its Q1 results, Meta Platforms also increased its capital expenditures, for the same reasons, from a range of $60 billion to $65 billion to a range of $64 billion to $72 billion. AMD is unlikely to post subpar data center results as a result of a reduction in demand because data center demand isn't going down. This implies that AMD will either step up and gain more business or keep losing ground to Nvidia in the competition. In any case, it is unlikely that the revelation will have a negative effect on Nvidia's shares. Nvidia's stock, meanwhile, would react favorably if AMD announces that demand is skyrocketing. Investing in Nvidia is still my go-to strategy in the AI weapons race, and it makes sense to buy shares before more encouraging earnings catalysts are announced. Jim Cramer discussed a number of equities, including Nvidia. During the program, Cramer lauded the firm and its chips, saying, "Nvidia should be your first thought when you hear about the expenditure." According to Nvidia CEO Jensen Huang, you cannot dominate search unless you purchase the newest and best CPUs. The critics claim that spending is a huge waste of money, but if you pay attention to Jensen, he claims that his top software and hardware stacks can provide 4 times the value for your money. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.